Hello, everyone. Welcome to the market opening bell on Tuesday, March 25th. After two consecutive days of declines, a cumulative drop of 1,081 points or 4.4%, the Hang Seng Index rebounded on Monday. The index opened 59 points higher, dipped 158 points to 23,531 in the early session, and then traded in a narrow range. In the afternoon, news emerged that the US might scale back tariff scopes, lifting the index by as much as 277 points to a high of 23,967. It closed up 215 points or 0.9% at 23,905. The X-share index rose 108 points or 1.2% to 8,850, while the Hang Seng Tech Index gained 97 points or 1.7% to 5,736. Total market turnover for the day was 2.331 billion Hong Kong dollars, down 31% from the previous trading day. Chinese Premier Li Qiang stated the need to further intensify counter-cyclical adjustments and introduce new incremental policies if necessary, providing support to the stock market. The Shanghai Composite Index rose 5 points or 0.15% to 3,370, while the Shenzhen Component Index edged up 0.07%. Combined turnover in Shanghai and Shenzhen reached 1.45 trillion yuan. The renminbi midpoint rate was set at 7.178 against the US dollar, down 20 pips from last Friday's closing price, hitting a more than 2 months low. Reports indicate that Xiaomi Group plans to place 750 million shares in a top-up placement with a price range of 52.8 to 54.6 Hong Kong dollars, representing a 4.2% to 7.4% discount to its Monday closing price of 57 Hong Kong dollars. The placement aims to raise up to 5.27 billion US dollar, equivalent to 41 billion Hong Kong dollars for business expansion, research and technology development, and general corporate purposes. BYD conducted Hong Kong's largest share placement in 4 years this month, raising US dollar $5.59 billion, equivalent to 43.5 billion Hong Kong dollars, though its stock fell 6.77% on the day. BYD reported 2024 annual revenue of 777.1 billion yuan, up 29% year-on-year. By segment, revenue from automobiles, auto-related products, and other products reached 617.3 billion yuan, up 27.7%, while revenue from mobile phone components assembly and other products hit 159.6 billion yuan, up 34.6%, accounting for 79.45% and 20.54% of total revenue, respectively. Net profit grew 34% to 40.254 billion yuan. BYD proposed a dividend of 39.74 yuan per 10 shares. BYD Electronic achieved 2024 revenue of 177.3 billion yuan, up 36.4% year-on-year, driven by expanded product categories and market share gains from major overseas clients. A recovery in Android demand boosting consumer electronics revenue, and strong shipment growth in smart cockpit and autonomous driving systems fueling rapid revenue increases in the new energy vehicle segment. Emerging fields like AI robotics also contributed new growth momentum. However, the gross margin fell 1.06 percentage points to 6.94%. Net profit rose 5.55% to 4.266 billion yuan. A final dividend of 0.568 Hong Kong dollars per share was declared, up nearly 6% year-on-year. By business segment, consumer electronics revenue reached 141.2 billion yuan, up about 45%, with component revenue at approximately 35.6 billion yuan, up 161.5%, and assembly revenue at about 105.5 billion yuan, up 26%. Companies announcing earnings today include Kuaishou, Bilibili, China Telecom, Wuxi Biologics, Nongfu Spring, Shenzhou International, Heng An International, and WH Group. Kuaishou is expected to see Q4 2024 sales rise 9% year-on-year, driven by strong growth during the Double 11 shopping festival, with GMV projected to increase by about 15%, boosting commission income by 14%. Non-GAAP net profit is estimated at 4.7 billion yuan, with a non-GAAP net profit margin of 13.1%, up 0.4 percentage points quarter-on-quarter. Investor focus includes Q1 and full year 2025 advertising and GMV outlooks, AI development, and profitability and profit growth projections for the year. Bilibili is forecasted to report Q4 2024 revenue of 7.7 billion yuan, up 21% year-on-year. Online gaming revenue is expected to surge 78%, contributing about 23% to total revenue, while advertising revenue is projected to grow 24%, accounting for 31% of total revenue. Non-GAAP operating profit is estimated at 400 million yuan, with a non-GAAP operating margin of 5.2%, driven by solid performance in online gaming and advertising, improving operational leverage. U.S. President Donald Trump delivered a speech at the White House stating that tariff exemptions might be granted to many countries, leading to a sharp rise in U.S. stocks. The Dow Jones Industrial Average closed up 597 points, or 1.4%, at 42,583. The S&P 500 rose 100 points, or 1.8%, to 5,767, and the Nasdaq gained 404 points, or 2.3%, to 18,188. The Nasdaq Golden Dragon Index, which tracks Chinese concept stocks, closed at 7,890, down 2 points. The Magnificent Seven tech giants all rose. Tesla surged 12%, marking its best single-day performance since November last year, with gains accelerating late in the session after the FBI announced the formation of a task force to investigate vandalism of Tesla vehicles and facilities. Nvidia, Meta, and Amazon each rose over 3%. AMD climbed 7%, Palantir increased 6%. On the economic data front, S&P Global released the preliminary U.S. March manufacturing PMI, which fell below 50, dropping from 52.7 to 49.8, missing expectations of 51.8. The services PMI rose from 51 to 54.3, exceeding forecasts of 51. However, service providers' confidence in the outlook for the next 12 months dropped to its second lowest level since 2022. Our stock pick today is TK Group, stock code 2283. TK Group regained growth momentum in its financial performance for the year ending December 31st, 2024, primarily due to most countries globally entering an interest rate cut cycle, which boosted consumer confidence. This led to a new development cycle in the consumer electronics industry, with branded clients actively rolling out new products, a warming market demand, and a significant increase in customer orders. The group's revenue for 2024 reached 2.358 billion Hong Kong dollars, up 21.2% year-on-year. Among its segments, the mold fabrication business maintained steady growth, with revenue rising 12.7% year-on-year to 698 million Hong Kong dollars, accounting for 29.6% of total revenue. The group's Industry 4.0 strategy implemented in recent years has yielded significant results, with the mold fabrication segment maintaining a high gross margin of 37% in 2024. The plastic components manufacturing business segment saw a notable recovery, with revenue increasing 25.2% year-on-year to 1.66 billion Hong Kong dollars, and a gross margin improvement of 0.7 percentage points to 22.1%. Notably, the mobile and wearable devices segment and the commercial communication equipment segment performed exceptionally well, with revenue growth of 41.7% and 35.3% respectively. As new products enter mass production, order volumes rebounded, significantly boosting capacity utilization. Combined with the group's ongoing efforts to optimize production processes and enhance management, cost reduction and efficiency improvement measures continue to deliver results. Gross profit for the year rose 22% to 625 million Hong Kong dollars, with the gross margin increasing by 0.1 percentage points to 26.5%. The group maintained strict control over administrative expenses, reducing the proportion of total revenue from 14.1% in 2023 to 12.9% in 2024. Net profit for the year surged 28.2% year-on-year to 261 million Hong Kong dollars, with the net profit margin rising 0.6 percentage points to 11.1%. As of December 31st, 2024, the group's sales orders on hand reached 889 million Hong Kong dollars, a 7% increase from 830 million Hong Kong dollars on December 31st, 2023. Looking ahead, the group is deepening strategic partnerships with consumer electronics brands, increasing investment in new product development, and actively expanding its market presence. It has successfully entered the supply chain of a leading metaverse industry player, providing comprehensive support from mold manufacturing to product design, assisting clients in developing AR glasses and launching new products to the market. Amid geopolitical risks and uncertainties in international trade policies, the group has established an overseas production base in Vietnam, creating a China plus Vietnam dual production layout to address market fluctuations and enhance supply chain resilience. Given the sustained rise in market demand, the group plans to expand its production capacity in Vietnam, increasing the factory's production area fourfold and replicating the high-quality plastic injection molding capabilities of its China base to the Vietnam facility. It will also provide mold maintenance and repair services to ensure the speed and efficiency of large-scale production. Simultaneously, the group plans to upgrade its domestic production bases to comprehensively enhance manufacturing capabilities and efficiency. The Suzhou factory will expand capacity to seize new opportunities in East China. The Shenzhen Guangming District headquarters will see increased investments to expand its fully automated dust-free production workshop for medical consumables on one hand, and enhance the manufacturing capabilities and precision of the high-precision molds on the other. This will meet the increasingly stringent structural design and precision requirements of medical equipment and high-end consumer electronics, delivering highly reliable and groundbreaking plastic product solutions to clients. Recommended buy price 2.25 Hong Kong dollars, target price $2.5, stop loss $2.1. I do not personally hold the above stock.